Bitcoin is essentially a way to transfer money over the internet efficiently within a decentralized network. However, it has been shrouded in controversy, with many popular investors like Warren Buffett and Michael Burry from The Big Short being very bearish on it. Nevertheless, why do people even believe in Bitcoin, and why does it have such a high price? Firstly, we must understand, how do we accept something as a viable currency? Currencies have value because they can be used as a store of value and as a unit of exchange. Basically, we take something that has a relatively stable demand and hence a relatively stable price and calculate the value of all the goods and services in an economy relative to that. Originally, if one person wanted something from another person, they had to exchange it for something another person wanted. This is called the barter system. Hence, too inconvenient carrying different types of goods around and too difficult to calculate, for example, how much 3 books were worth relative to something like cows, mankind turned towards minted currency. The term minted essentially means currency produced by someone, not obtained naturally. An example of this could be a gold coin. One of the biggest criticisms Bitcoin has by people like Warren Buffett is that Bitcoin does not have its own intrinsic value. What does he mean by this? Well, when currency was originally minted, they were done so using precious metals which were durable and had a relatively stable demand and hence price. At the time, there was little risk of them depreciating in value. This was their intrinsic value. Nowadays, we use paper money produced by the central banks of countries. Paper itself does not have its own intrinsic value. This kind of currency was termed as fiat money, which refers to a currency issued by the government and a currency that is not supported directly by a physical commodity such as gold or silver, but rather by a government that issued it. They were adopted because precious metals were far too scarce and the government had the option and the ability to control the supply of fiat money. Being able to print money ensures that the government will never go broke and always has enough money to pay off its debts. It also prevents deflation from taking place, which many economists agree is far more dangerous than inflation. Nevertheless, this unlimited supply of money leads to several problems. For starters, printing out a lot of money leads to higher inflation, and this can be disastrous for the economy. Corrupt officials in the central bank may take advantage of their ability to print money. Printing money and managing inflation is like a careful balancing act. When done wrong, can lead to investors being disillusioned by the government and can cause massive amounts of capital flight. Bitcoin's limited supply keeps it scarce, and it holds its value with relative stability for years to come. This is why Bitcoin is often called digital gold. Limiting its maximum supply and slowing the rate at which new Bitcoins are mined causes each individual Bitcoin unit to appreciate in value over time. In addition to this, Bitcoin is divisible up to 8 decimal places, whereby the smallest unit of Bitcoin is called a Satoshi, named after its creator Satoshi Nakamoto. Bitcoin is also easily transportable. It's not a physical currency and exists over the internet. For similar reasons, it's far more durable than something like fiat money. It cannot also be counterfeited easily, and this is because of the security involved in the blockchain technology. The only probable threat to Bitcoin safety that has been identified so far is quantum technology, which is at least 10 years down the line. However, blockchain has a safety mechanism against this as well. In the case it's compromised using quantum technology, the blockchain splits itself into 2 different chains, whereby one is compromised and the other isn't and contains a whole new set of encryption. Although the bad press would probably lead to a drop in value, Bitcoin is still relatively safe. Lastly, unlike fiat money, which is based on the people's trust in the government, people do not have to trust each other to trade Bitcoin as it's based on a decentralized ledger. Bitcoin, rather like gold, is valued based on how much people trust it as a store of value. This trust has only gone up in recent times, with many popular people such as Elon Musk endorsing it. And although Tesla withdrew its support for Bitcoin because of concerns over energy consumption, which is against Tesla's beliefs, his tweets still seem to suggest that he believes Bitcoin is a better alternative to centrally controlled fiat money. Although Bitcoin has all these advantages over fiat money and acts as a hedge against inflation, it has several flaws, and I've mentioned why in the video in the cards above. Regardless, I still see it as a great store of value, as even powerful first world countries such as the US itself has high amounts of debt, which causes people to lose trust in centralized currencies. Regardless, Bitcoin has several hurdles to cross before it becomes a viable currency, at least in the current state of things where prices fluctuate profusely. So thank you for watching this video, and do check out the other videos I've made on cryptocurrencies. I have made a playlist for them, and I'll link all the videos in the description below.